As the general partner of Dragonfly, right, what are the three things that you look in a startup when you're analyzing them? Like, what are the top three things that you look at them?
You can't tell me I ain't fly. You can't tell me I ain't fly. I know I'm super fly. I know I'm super fly.
What is your role exactly, and like, what are some domains that you actively look into?
Yeah, so we have 4 partners.
Mm-hmm.
And our role is really to, invest LP money, right? I tend to spend my time on things that look more similar to my background. So I spend a lot of time on things like stablecoins, payments. I do a lot of our CeFi stuff, especially on the western part of the world.
Right.
And spend some time on DeFi as well. Like I said, I'm very interested in the way we've kind of re-architected financial services on chain.
Right.
And so, I tend to spend a lot of my time on those things, but the reality is that at Dragonfly, we're all generalists. And all we're trying to do is find, the best investments for our LPs.
Right. I think you recently tweeted that now you're cutting down the number of deals that you do in a quarter and doubling down on the size of the investments, right? So how is that thesis?
Yeah, so I wouldn't say we primarily do later stage deals. I would say we do seed through Series B.
Okay.
We continue to be active in seed. I think we have definitely taken the perspective that we need to figure out where we have a lot of conviction, and we need to get as large of check sizes as we can into those things, and we need to take ownership that makes sense for us. If you look at like any of the math around how like venture capital has worked in the Web2 space for years, the best performers have been those who were able to get large ownership pieces and protect that ownership in their best performing portfolio companies, and grow with them and get kind of continue to hold them over time, right? And what hasn't done well in Web2 VC is just spraying and praying, right? We've seen in the past some that do well at times in crypto because just the whole market goes up. In 2021, if you remember, like it didn't matter what token it was, like everything was just like going up, right? What we've seen this year is a little bit of a dislocation where like asset selection matters, and over time as the market matures, like that should happen, right? And that will continue to happen, right? Like it's going to matter if you're a good project or a bad project. Your tokens aren't just going to do well because everyone likes tokens. And so our perspective is being informed by that like we have to react differently to the market, and we have to make sure that we are selecting the assets, the protocols, the companies appropriately, and that we are protecting our ownership in those. And so we're going to continue to do that through this market. And I think my perspective is most likely every sophisticated manager in the space will start doing the same thing.
Awesome. I think we're like literally swimming at this point in time if you look outside.
Yeah, this is like crazy.
This is
so we're gonna have like water coming in the car pretty soon here.
So yeah, you guys have like an AUM of like more than 2 billion right now, and you recently like raised another fund which is like $650 million, right?
The last fund we raised was in 22.
Okay, so that was the 650 million one?
Yeah.
All right. So can you help us understand how the fund is structured, and what are like the different things? There's preference, there's carry, there's management fees and everything, right? Can you like explain it to us who's like, everyone's like interested about VC space. There are people who want to like enter the space. It would just be like interesting to learn more on that.
Yeah, so I mean, it's very typical VC. We're structured in the same way. So you raise some amount of money. For us, it was $650 million. You charge management fees to basically pay for all of your expenses. The kind of typical management fee is 20%. Sorry, 2%. I wish it was 20%. No, the typical management fee is 2%. That basically pays for all of your expenses and pays for salaries and things like that for the team. Every fund takes what they call carried interest, to your point, which essentially means that you get some portion of the returns. So if you're, if our fund were to return, it's on that $650 million of community capital, we're return $100 million. Now that would be a bad outcome, but like just to make the math easier, if we return $750 million back to the LPs, we'd have $100 million of gains. We would get 20% of that, which would be $20 million.
Fund your size, right? Like, how do you find LPs? Who are most of like these LPs? What are their backgrounds? Where do they come from?
Yeah, so at our size, the LPs tend to be a lot more institutional.
Mhm.
So, so our LPs are primarily, professional fund managers who have a mandate to invest in funds,
Mhm.
right? So these are things like sovereign wealth funds, U.S. college endowments and university endowments, pension funds. Sometimes it'll be kind of large, sophisticated family offices as well. So we find LPs the way pretty much everyone else does, which is through our relationships. There's also there's ways of which you can be distributed, whether that's through kind of wealth management channels, if you want to have a broader kind of wealth management strategy, or even like there's like placement agents. We don't use them, but some people do. Who those placement agents already have relationships with the LP community,
Mhm.
and will help essentially distribute them to their relationships. So, I think since 2020, 2021, pretty much all of the sophisticated like LPs and fund managers, like they understand the space. Not all of them want exposure, but they understand the space. They understand kind of who the players are. They've done the work. They've done the research, and so we're past the stage of having to explain crypto or even necessarily like who we are to most of the institutional LP community. Some cases they don't know our differentiation from others, but at this point, I think most of them have mapped out the space and understand who those kind of larger funds are in the space.
Good. As the general partner of Dragonfly, right? What are the three things that you look in a startup when you're analyzing them? Like, what are the top three things that you look at them?
So it depends on the stage, for sure.
Okay.
Things that
Okay, we could start with like an early stage and then probably a later stage one.
yeah. So listen, I think on the earlier stage, it's really a couple things. It's team, right? And so, are the founders impressive? Do they have a bias to action, which we care a lot about? Are they going to ship quickly? And do they have just, I think, an ability to learn really quickly, which I think is what's going to happen at the seed stage is like you're invariably going to pivot. You're going to learn something new about your market. You're going to have to think about changing your protocol or your business. And if somebody can ship quickly and they can learn and adapt quickly, then that's someone who I think is going to be successful, regardless of what their background is.
Right.
Obviously, having a very strong background in a specific thing that they're trying to do is quite important as well. That's really the most important thing at the seed stage. We also look at addressable market, and whether or not we believe that addressable market is going to be big enough. And what I look a lot for is also, are they doing something new? Is it going to go like 0 to 1, or is it the 15th fork of Uniswap that I've seen? Right. And not to denigrate anybody who's done a fork of Uniswap, but we really am focused on trying to find new things. When you go a little bit later stage, like we need to see some sort of product market fit, some sort of metric or group of metrics that allow us to understand that the market is reacting to what you've done and what you've built. The stuff about the team still matters, still exists, still look completely the same. But I also want to know that you have users, that you have volume, that you have, maybe it's, transactions, or maybe it's TVL. TVL I think is a bad metric in most cases, but in some cases it's fine. And so we try to triangulate then, okay, well, how is this doing? How is this doing relative to how, somebody in this market has done it before, or how is this doing relative to how this market is growing? And those are the types of things we like to look at. We try to be, or at least I try to be personally, very data driven in the way we think about the way we invest. And so we also do bring in things like alternative data, whether that's website visits or stuff like macroeconomic data that might exist in those specific markets, et cetera. So
I know I'm super fly. I know I'm super fly.